Alright traders, I'm glad you chose to be here. And in this short gift video, I will share with you a powerful aspect of Hendray's opening range concept, that is HORC. One that not only provides clarity but also strengthens your confidence in trading. I encourage you to watch until the end to fully grasp the insights being presented. Without further ado, let's dive into reality. Alright traders, welcome to the chart. I intentionally picked this trade for the tester session based on two reasons. Number one, because it's quite a detailed trade that will summarize the whole thing that HORC is all about. And apart from that, because I actually gave this particular trade the second entry for the sales right to the target on my social media page, X, formerly known as Twitter. And also I project this particular buy trade right before it happened, all right? Right before it happened, and I'll show you. And in fact, price has not made the final target. Let me show you a live chart in like few minutes from now. This is the CFD chart. And like few minutes from now by 2:30, that is, let me go to 30 minutes time frame. That is, in 30 minutes from now, as you can see from here, CP high will drop. And we'll both see how this trade will most likely run to the target. All right, that is another major reason why I pick it, so that you can see the replay 2 is not on, nothing is on. This trade was given live, and I'll also show you now on my Twitter page when I actually gave the trade. Let me share that. Okay. All right, guys. So you guys have seen where I exactly gave it on Twitter. Okay, now let us explain the two trades and let us see what we have. Now, looking at this chart, the chart is blur, and one thing I always do is that I always analyze on the futures chart. That is where I do all my analysis. All right. Now, looking at this particular chart, one thing I always say is that looking at candles alone is blur and there is no much meaning to it. What my concept teaches is that it tells you significantly highs or lows that are liquidity, not with just your ordinary highs, but with interactions between buyers and sellers based on how they cycle from the open or via the open of the day, the session, the week. And if you are new to my concept, I would advise that you check the 2024 mentorship playlist, which is completely free. Okay, it is completely free and it will be linked in the description below. All right, now looking at this particular chart, it is blur, and for me, I do not understand anything. All right, I used to be like you. I used to just trade blindly. I used to trade SMC, support and resistance, not as if those things were bad, but they didn't give me confidence to really scale up as much as I should, because at some point it's when, even for months, a certain strategy you can have winning streaks for weeks, for months, but then you enter into losing streaks. Losing streaks are not normal. Losing 10 trades in a row are not normal. All right, let's call a spade a spade. Your psychology is not the problem, okay? So looking at this particular chart, the first thing I always want to do is to check for where is the money, where is the true liquidity, okay? Now, look at this low. Look at this particular low here. This low here is the absolute low in terms of structure. That is the absolute low. That is the foundation of this particular high that creates that high. And also, what now raised that low? Okay, the interaction between what raised that low and the low itself is what would determine the absolute bias against this, which means with HORC, your target is your bias. It's the reason why you are trading in the first place. It means that if this particular trade now did not get to my final target, then my analysis is wrong. Okay, this particular trade as well, if it did not get to this my final target, my analysis is wrong, because the target initially is the reason why I traded into that particular range. It is because of the target that I traded into it. All right. Now, having said that, let's first look at the relationship between this low and this high. Of course, I even took a buy from here, but I took the profit for that on this first target, this high. The same reason why this high is available as liquidity is the same as why this is available as liquidity. All right. And it is the same as why this final target is available as liquidity. It is the same reason, the same logic that makes this to be available as liquidity. And that's one thing about trading a very objective approach. When you are very objective in your approach to trading, then you will see a lot of changes, consistency for as long as you are a trader without needing to jump from one strategy to the other. All right. So let's first look at these two. Now, for this particular area here, for this high right here, okay, for this other high, which was my first target, for this other high, the absolute low is this low. That is where this trend, this buy from this low to this high, the low that leads to the creation of that high is this. Just like I said there, the low, the major origin that leads to this particular high is this low. It is not this low. It is not this low, but this. That is the beginning of this short buy trend from here to here. And the interaction of what comes to rate that low is what will determine if this high is liquidity or is not liquidity. Now, the low that created the high, the absolute low that created the high, we'll call it our passive. And the move that comes, the move that rates the low, the passive now, we will call it our aggressor. At every low, you can either have buyers as dominant or sellers as dominant. Yes, buyers can sponsor sell. It is just the normal market way. Even in our physical market, when you sell your goods, what do? You go back to the wholesaler to buy back. Most times, even more than you have sold. Why are you doing that? So that you can now sell again to make more profit. So every seller buy, every buyer sell. Every seller buys and every buyer sells. At this low right now, the passive is this. That is the low that leads to the creation of this high. And the aggressor is this. All right. If you are new to my channel, you might not understand some of these things. But like I said, check the 2024 playlist. All right. Now, from the 2024 playlist that was sent as the first gift for you, if you have studied before you come to this particular video, you'll be able to relate more. All right. Now, when we have this particular passive, the question here is, who are the dominant participants here and what is their nature? And what is their nature? Okay. And what is their nature? Therefore, we'll activate this indicator. We call it FXN week and day separator. So we want to know what raised this particular low. Are they in the same week? Are they in the same month? Are they in the same day? Are they in the same session? The thick broken lines represent the open of the week, another week, which means that this week that opens, this is the Wednesday of the week. That is when the passive low was formed. And the aggressor that raised that particular low was on Friday of the same week. Now we are in the same week and we are also in the same month, January 29th, and this is January 31st. So in this case, and we are of course obviously in the same year. In this case, I don't need to bother myself about the yearly participants, about the monthly participants, about the weekly participants. Why? Because they are not involved in this scenario. However, the first type of participants that I should be interested in are the daily participants. Why? Because these two are formed in separate days. These two are formed in separate days. All right. Now that we know that this is Wednesday, this is Friday, the question is, as at when price gets here on Wednesday, who are the participants based on the cycle of price? All right. From the open of that day, who are the present participants at that low in terms of daily participants? And who are those for the aggressors? If the participants for the passive is different from that aggressor, then this particular high would totally be available as liquidity. That is, for example, if I have sellers participants here, which I always denote as minus. So if it is daily sellers, I will say D minus. If it is weekly sellers, I will say W minus. So if it is sellers that are dominant at this low, if I check the passive here, and I see that it is buyers that sponsor price down to this low, and I check the aggressor, I see that it is sellers that sponsor price down to that area as at when price is reading it, then it means that they will be diverging. That will be buyers and sellers divergence, and that will make the low that link both passive and aggressor to be the liquidity, which will be my buyers that I will set up my trade against. All right, that is the first thing I will do. Now, when we cut this, all right, so let's cut this right now. Okay, and I'll activate the HORC indicator because I don't want this to be too long. All right, I will use the HORC indicator to quickly check the passive. Don't forget, D minus represents sellers participants for daily. W plus represents buyer participants for weekly. All right, so let's activate our indicator. You can see HORC jam indicator. This is an in-house indicator. I don't sell it to the public. It's purely for students that understand how to do things already, okay? So you don't need to bother yourself to ask me. Indicator is not why we trade. It is just to help us easily get signal, which we can get manually, which you can get manually if you really get to learn HORC. Now we have activated our replay tool so that our indicator can get there. You can see that the first interaction from the open of the day, it was sellers that are there. You can see that it cleared the low at the open, they cleared the low, cleared the high, made the target flip. Don't worry, if you have seen the 2024 playlist, it is free on YouTube and also sent as part of your package, which is this video. All right, but for the indicator straight up, you can see D minus, focus on the daily. I told you I don't need the yearly, the monthly. Yearly is the Y, monthly M, weekly W. So focus on the daily and sessional alone, because of course the passive and aggressor are formed in different sessions as well. Now here, focus on the daily, D minus, and the sessional, because of course the passive and aggressor are formed in different sessions, but they are formed in the same week, under the same participants, same month, under the same participants, and yearly under the same year under the same participant. So as I hear price, the buyers now took over after sellers completed their cycle. And buyers also have 3 cycles to make according to my concept. Buyers now clear the high and they clear the low, which means it is buyers that sponsor price up to here. So our passive signal, we are more interested first in the higher participants, that is the daily. The sessional is also important, but the higher one, based on the relationship between passive and aggressor, for example, if it is different week now, it is the weekly one. If the weekly is already diverging, do not worry, the other lower ones will diverge later. What you are to do, I will tell you shortly, once you know if the higher one is diverging. The higher one here is D+. So you can see that what we have here right now, D+, which is this, is the nature of the passive. Let's check the aggressor. What raised that particular low? What raised that particular low? Let's check it. Let's check for the aggressor. What raised this low that we have here? That low was rated on Friday. And Friday is the open of Friday. These 10 broken lines are the day separation. These are the week separation. So here we have D minus, all right? As a when price, and this is the candle. So as when price is still here, you can see price clear the low, clear the high, made the target. It is still sellers, though inside that same day price data flipped to buyers, but that's not of our concern anymore. The major thing is what move that particular candle that raised the passive, the nature of the traders there, which is D minus, and at the passive here we have D+. So that is D minus. Automatically, this I is available as liquidity. What do I need to do? Before we go to what we need to do, we need to now check for this particular day, that same day. We are still within that same day. Look at this low. This low right here, this low right here that creates this high is the passive in this case, is the origin, and is the passive in this case. Also that same day, before we enter the same week, that low was raided by that same day, but with different participants, okay? By that same day with different participants, let me try to, let me zoom that up. Okay, now look at this. This is what I'm talking about. Right here, this is the low, and let's draw a straight line there. You can see the candle that raised that low is this candle, which is still, you see that we have not gotten into a new week, which is still that same day. As at this same day, we have sellers here, price clear the low, clear the high, made the target. Now, buyers are in control, D+. Let me highlight that. You can see D+. Buyers now clear the high, they clear the low up to here. So which means D+ is here. And they met the target. And this exact candle flipped the participant within the same day. Flipped the participant within exactly the same day. D-, flipped the participant. So D-, it is sellers that are here. Therefore, making this high to be available as liquidity. The aggressor are sellers in nature. They are sellers in nature. Buyers took over from sellers first. Within that same day, it is very possible a flip can happen within the same day range. Okay, that's why I mentioned earlier that under the same participants. Then we now have D+, D-, making these to be available as liquidity. Buyers, sellers, interaction. It can be sellers, buyers. In as much they are opposite participants, then that means that area is heavily imbalanced. In fact, that is your true imbalanced area, which you call it high true liquidity. So what do you want to do here? Because the nature of the highest participants here are daily, the next thing you want to do is to go to a valid daily. See, we have just less than 40 seconds to the news. So let me go to Euro US. That's where we can see the live. Okay. News. Wait. CBI has dropped too. Okay. Let's see what happens. All right. Now coming to the CPI has dropped. Coming to the chart, there must have been an available liquidity here. But I am really certain the price will move from here to the external liquidity, that is this available liquidity here. That is uncertainty. I just want us to quickly check CPI. So in as much this low is not rated, by the time I check, maybe when I'm towards the end of the video, I will let you guys understand this supply must have been able to sponsor a certain engineered liquidity within this wedge. But price should still go to its initial direction target, which will be this high right here. That is the reality. Okay, so CPI has dropped, no problem. Let's go back to our analysis and let's continue from there. All right, now back to what we have, the discussion. These two highs, this high is available as liquidity, this high is available as liquidity. Therefore, what do you want to do? The next thing you want to do is you now want to go to, since the highest participants relationship here is daily, and here as well is daily, that makes this to be available as liquidity and this to be available as liquidity. Then the next thing is to go to a valid daily demand, because daily participants, if they are the highest interacting, it will be daily demand zone or supply zone. That's where you want to go to. That's when you go to daily time frame. This is how you even use your time frame in an objective manner. Some people will ask questions like, oh, which time frame should they use to analyze? No, you're asking the wrong question. The question is, which type of participants, who is the highest that is interacting? If it is yearly participants that are interacting, because that is the highest participants you can have. Maybe a new year just opened against previous year, or a new year flipped. Then you have to start from yearly zone to start refining. You pick your supply or demand zone based on the nature of the trade. If you want to buy, you pick your demand zone. If you want to sell, you pick your supply zone. And if you really don't have much understanding about supply and demand, I'll also link supply and demand series that I release on my social platform like Instagram and TikTok. I will link those posts to this particular video as well. Therefore, ensure that you watch the supply and demand They are just 10 minutes video each to understand how to pick supply and demand. So now that we have daily participants involved, we'll go to daily time frame to pick daily zone straight up. If it is weekly participants that are involved as the highest that are diverging based on what I explained earlier, straight away I will go to weekly time frame. This is objectivity. This is how you know which time frame and what you want to do there. What you want to do around such time frame is to go and pick its zone. Then you will now start refining that zone into lower one. Okay, now I'm on daily. I can now go to sessional. Oh, by the way, sessional so have their time frame. Your Tokyo session runs for 8 hours. Your London session runs for 8 hours between its open and its close. Your New York session runs for 8 hours. They have their session. Okay, so these are things that I will look into in order to pick my zone. Therefore, now that we have this, we can still cut that part. Okay, let's cut this. We can cut our charts now. All right, so let's now go to daily zone that is valid. Okay, so which daily zone was I able to pick that is valid here? Validity simply means a daily zone that it in itself is not available as liquidity. It in its own nature is not liquidity. That's the meaning of a valid daily zone. Here, I can see a drop. I can see even this candle, this momentum candle is still a drop as well. When we have momentum candle with a long wick at the low or at the high, since I want to buy, inside the wick itself is a demand zone. That was how I picked my zone. So this zone from daily is my zone, which I expect to sponsor those two targets that we have in price. All right, and then now we can go back to our lower time frame and our replay to, so that is within this range here. And we can hand our replay to, and can you see that's exactly the area that price tapped into. And of course, it's sponsored the first buy to the target. Then why the sell? Why did I sell in Bitcoin? Same logic. All right, same logic. Let's look at what happened here. Okay, then look at what happened here. About this particular lower liquidity. Let's talk about this lower liquidity. Almost same case for the upper one with a little difference, because the upper one includes what we call closing range. It includes London close. All of that you get to understand later as you study HORC or as you make decision if you really want to understand this concept better. Okay. All right. So let's look into this liquidity here. Let's look into that liquidity right there. This low right here. Okay. I will go to 1 minute time frame because it's a sessional. All of these have rules and which I have explained for free. So now I'm interested in session because we are in the same day. We are now in the same day in this scenario for this passive, because what created this low here is this high. So this is our passive. And what raised that high is the aggressor. All right. So it is the aggressor that raised that high. All right. And that aggressor is sessional, it's not daily. You might be looking at the D plus that we have here. No, it is here that the day flipped at this point. This is where the day opened. That day is clear the low, clear the high, made the target. Its flip point is this high. Is this high. All right. It is on the year. That is why this is showing D plus. But as at for this range between this low, all right, from this low right here and the aggressor that raised it, okay, the candle that raised it is sessional interaction. It is two different sessions, but within the same day. This is that day open. You can see that there is no other faint broken lines here, meaning another day has no open. The D plus you even see here is based on this same day that later flipped. But the aggressor here that is the candle that raised this is sessional. All right, so let's look at the session here. The session here is this 10:38 a.m. That will be London. I will activate the sessional settings now. All of this you can do manually. You don't need your indicator. Majorly, some of you will be wondering, do I need the indicator? The indicator, we don't even sell it to the public. It is when you understand all of this. So it is not because of the indicator. It is the thought process that we have put into the indicator just to make our work easier, okay? So do not fret about that. So the indicator showed me that I have S plus. That is, as I hear, this is it. This is 9 a.m. London open presently at 9 a.m. And when daylight saving changes again, it's usually open around 8 a.m. That will be from November to March. So that is, the signal there is S plus. So, and it is still London that is here. And they do not flip. So that is buyers participant. Then let's look at the aggressor. The aggressor is S minus. Just look at the sessional alone. S minus. That is exactly 2 p.m. which is New York open. Nigeria time now in case you are not in Nigeria. S minus, that is sellers. So buyers sponsor this move here at this high. Sellers sponsor this. Which means this is available. Now, what is the sessional time frame? I said it earlier, 8-hour time frame. So we'll go to 8-hour time frame right here. We'll go to 8-hour time frame right here. We'll go to the 8-hour time frame. And you would see, remember, this long wick right here, this long wick that you see here, let me neutralize the indicator. Let me remove it. This long rejection wick that you see here, do not forget that we say that this high is available as liquidity itself, is a target. That's why I meant earlier when I said your zone must not be liquidity itself. It must not be. Your zone must not be liquidity itself. Now, the first supply zone we see here, which is this long candle, or this doji graveyard candle, was meant to be our 8-hour zone that ought to sponsor it. But because it is liquidity itself, imagine I'm reversing towards you, you can't reverse me. Because the reason why our price is buy initially is that price is reversing towards that zone. So that zone cannot sponsor price back. So this 8-hour supply zone, the first supply zone we see here is liquidity itself, hence it cannot sponsor that move. But look closely here, you would see that the last base candle we have here, which is the other one we said is our final target for buy, which is available as liquidity as well, that candle also cannot sponsor the 8-hour move, the sessional move. It cannot. But the candle that can sponsor that move, there is a candle in between. Look at the rejection. I told you any momentum candle here, the supply is the long wick that we have here. And this is how you even get to understand if a zone will be mitigated multiple times. When we check lower time frame around this area, I saw that based on the same thing I just explained, or that I've been explaining, I saw that that zone is not available as liquidity. So that zone right there can sponsor, since it is an 8-hour zone. If we go to a daily time frame, that candle is not appearing again. So let's say the liquidity I was to target here was a daily liquidity. Let's say it was meant to be a daily liquidity. What do you think will happen there? It simply means that this trade wouldn't have been taken, it wouldn't have been valid, it wouldn't happen. Because the daily candle, the daily zone, I didn't mean that it is daily liquidity that is the nature of the liquidity I was targeting. It wouldn't happen. But because it is 8-hour time frame that can sponsor it, and there is an 8-hour candle whose supply area is not liquidity itself, therefore that's what we picked to target for our entry or the trade, exactly that area, without necessarily putting stop loss here, because this in the first place is even liquidity as a swing move. Look at that beauty. All right, look at that beauty. And there we have it. We have that meeting our target. Okay. So for all of this that is happening for CPI, they are just minor. In as much as stop loss did not get it, their price will surely get to the final target. And you yourself will see that. You can check for yourself. This is a live market. This is Euro USD. Today is 12th of February. You can follow up, and the entry around this area, this low, this is 8-hour time frame, is a stop loss, and this is the futures chart, by the way. So, but you can check the price action, check if it later gets it or not. This is a live market now. I've cancelled the replay too. You check it yourself, and then you will see for yourself, all right? And then you will see for yourself how beautiful this is, how confident. Imagine even with the news, I already know that this candle around this area must have been the one that sponsored the news move based on maybe a sessional divergence again, because this is visible on 8 hour, isn't it? This supply is visible. So this might not be available as liquidity. So if it is 8 hour zone, obviously it can sponsor sessional move. Let's even check that. Let's check that before I round up the video. Let's see why did CPI had to sell first to take a certain liquidity here. Let's check together. All right. And assuredly, I know that it will continue in my direction even with all of that happened. Let's check. Let's see. This is what we call trading. Knowing exactly what you are doing. Okay. So let's activate, on 1 minute time frame now, we'll activate the sessional indicator and I will get to see what happened right there. What was sponsored price within that range. Let us check. All right. From this, for example, yes, I've seen one liquidity that surely you must have targeted. All right. So for this, for example, the participants at this are within the same day. Buyers S plus, we are within the same day, 11th of February. They are buyers S plus. Daily is not involved there. Therefore, we don't need to bother ourselves. They are buyers S plus. Can you see that? And the closing range participants, see, you see that one has C. That is the closing of Frankfurt, 4 p.m. C minus, that is sellers that are there. Closing range of recession and opening of recession overlap also as liquidity. But closing range effect only lasts for 1 hour. For example, you see that there is another closing range here, which is C plus. All right, that is London close. And you see that this is the passive here. The passive here is this I. This I is what creates this loop. So this is also available as liquidity. You see that this is C minus, that is Frankfurt closing range signal. The participants here there as when Frankfurt was closing 4 p.m. were sellers C minus, and the aggressor, the people that came to raid that move, is sponsored by buyers C plus. Therefore, these are available as liquidity. If I say closing range cycles for just 1 hour, just like Frankfurt closes and then the next close is London close, which is by 5 p.m. presently. What does that mean? Do you guess the answer right? That means that can be sponsored by a valid 1 hour supply. The cycle, 1 hour. So this low, for example, can be sponsored by 1 hour. Since closing range is also overlap with this, this can be sponsored by both 8 hour and 1 hour. That is sessional 8 hour time frame and the closing range negative 1 hour time frame. And that's exactly what must have cost price to move that far below. And of course, here as well, for this as well, I wouldn't know if this is available, but at least I know there is a reason why price went down. So this area here and also this low right here are targets that if I wanted to trade today, I personally also would have sold first. Can you see? And 1 hour, let's go to 1 hour. 1 hour valid supply is the one that must have sponsored it. Let me remove the indicator for now. Okay, those two straight lines that price targeted, can you see? That's how you pick nice and ideal liquidity. So let's go to 1 hour time frame. All right, let me move this here. Okay. And what do we have? We have these areas here. We have this. Anytime you see a momentum candle, according to one of the rules of the supply and demand that I discussed in those series of supply and demand, which I will link in this video, or I just check the description of this video. All right, anytime you see momentum candles, what happens is that you check, does it have a wick above it? If it has a wick, look at this, we have a wick here, we have a wick here, 2 momentum candles. You will now measure 133% of the wave. The 133% is this, we will actually this hour. So which means that should change now to something that has red. You measure the 133%. This ought to change. Yes, you can see the red now. So you measure the 133% from this red line. Okay, from this red line, let me increase the intensity of the red line. So from this red line to the high of that candle, you measure it based on the wick you saw above. You will now bring it down from the close/open of that candle. You bring it down to here. Anytime you see momentum candles like this, the rule is in the supply and demand video, don't worry. Very neat stores, supply and demand, and anytime you see such a rule, you will now bring from the open/close of those momentum candles downward. What will now be your supply in this case? Your supply will be all the way from that red line, because that is now the 133% of that zone, from that red line all the way to the highest high, that is to this wick here, and that will be your supply. So the 1 hour supply is this supply right here, which can sponsor the first one. Of course, 8 hour too. 8 hour, it was having a valid supply. Same thing on 8 hour. What did we notice on 8 hour? Let us measure. The same rule applies on 8 hour as I can see. What I saw here is a momentum candle. This candle that price is mitigating at the moment is a huge momentum candle. Look at it, but it has a small wick above it. So I'll measure from the high to the low of the wick. Then from that red upward is 133%. I will now bring from the close of that candle downward. So my supply will start from that red line upward to the wick. You can see 8 hour supply sponsoring the liquidity that you saw there. 1 hour of supply also inside it sponsoring the closing range liquidity that we saw earlier. So if I wanted to trade CPI, there's nothing it did that surprised me. If I wanted to trade it, this is exactly how I would have set it up. That's exactly the zone I would have taken the sell from. But as if that wasn't enough, trust me, the only thing I will do now is just to even add buy position to my targets, is to look for buy position to my targets, all right? Because my targets, I'm confident that it will get it. CPI has gone, and the next thing I will want to do is just to find value supply based on the absorption, demand based on the absorption that is happening here, right to my final target. All right, that is, I will find this something like this. I can find something like this, then to the low where my buy started from. All right, my first position, and I'll take it all the way up there. Let's see the final result. These are live markets. Let us see. All right, let me project this on the futures chart because that's my analysis chart. Normally, I can refine this low, but I don't want to refine it. Of course, by the time you get this video, I don't know where price will be at the moment, but I'm just trying to tell you that all of this does not mean we are selling down to this low. Our buy is value because until price gets to this final target, based on the fact that the value zone is already sponsoring it, even the first type of liquidity that look alike daily and daily is already met. So definitely this will also meet its targets. Alright traders, what you have just witnessed I'm sure must have blown your mind. The accuracy, the confidence, the fact that news dropped while we were doing the analysis, the fact that I am still saying that price will surely get to the target. What? That is enough conviction, if you ask me, for you to decide to join us and to have the full privilege to the private community. And yes, HORCSTUDIIO is launching soon, which is why I just gave you guys that filled the form this particular gift. With that being said, I have a package for you all. There is a pre-access package which involves weekly outlook, trading, proprietary firm accounts like FTMO accounts live with me. If you have been following me for a while, you will know that I'm doing some pro firm series and you'll see how exactly I execute these trades live as well. So for the pro firm series, you will also find the link in the description or on this playlist on my YouTube channel that will be displayed somewhere around here. All right, with that being said, let us come to the conclusion. What you've just witnessed is not just another approach to trading. It is the precision and consistency that define HORC. Clarity, confidence, and a structured way of understanding market movement are what separates struggling traders from those who navigate the market with control. If this level of insight resonated with you, imagine what mastering the full scope of HORC could do for your trading journey. The knowledge I've shared here is just a fraction of what's possible with HORC. If you are ready to break free from uncertainty and truly take control of your trading, HORC is the answer. Therefore, based on the HORC pre-launch package, which is included in the mail that is sent to you, I will leave you to decide, and I say I will see you in the inside, and of course also see you on the profitable side.